Let's use a few of the journal entries we made for the novel cup and post them to the ledger. Here are 3 selected transactions that we journalized for the novel cup. The first transaction here that we see is a journal entry for paying our rent for the month. So we debited rent expense for $2,000 and we credited cash for $2,000. Now we want to post that transaction. In the journal, we have all the information about the transaction and all accounts that were impacted by this. Now I want to go and actually update those 2 accounts. Until we post to the ledger, rent expense and cash does not change. So now we're going to go to the ledger and find those 2 accounts. So you'll notice the column post ref. This is a posting reference, and it's really easy for me to find those accounts in the ledger by the posting reference. So rent expense is account number 54 and cash is account number 11. So when I go over to the ledger, this record has every account in it and details about the account. So we will go and scroll down to find rent expense, which was account 54. So it's down there near the bottom. And all of our accounts in the ledger are listed in the same order that we saw those rules of debits and credits. So we start with assets, then we go to liabilities, then we go to equity. Specifically, we do the equities in that same order: stock, retained earnings, dividends, revenues, and expenses. We find those listed the same way in the ledger. So supplies expense is changing in this journal entry. What happened with it? It was debited, so it's increasing. So what we put here is the date, and this was February the 1st. We're going to put the item or description of what's happening. Monthly rent. Then we're going to put a reference back to the general journal to easily find this. I put general journal and it was on page 1, so I'm going to put GJ1 there. Now we debited that expense account, so I'm going to put this $2,000 in the debit column. And then I'm going to retotal my balance. So now I know that after I post this, supplies expense is no longer $812, it's $2,812. We're also not done. That's one part of the journal entry, but it's not all of the parts. So I've got to come all the way back up to find cash, which is account number 11. We're going to do the same thing for it. We're going to put in our date, what happened, posting reference, and then the amount. This was credited or decreased cash. So now, when I update my balance, it reflects that. The second journal entry recorded when we purchased equipment for cash. So now we want to post those to the ledger. Again, we know equipment is account 18 and cash is account 11. So we're going to scroll down a little bit and find equipment. So we're going to enter our details of that journal entry here. This was on February the 6th, and we purchased equipment. Don't worry about changing those columns for now. This was on general journal page 1, so that's how our posting reference. Again, easy way to get back and forth from the journal to the ledger to find out where everything is. And we purchased equipment, so we debited it, which is an increase to this account for $11,000. So now again, I want to update the balance in this account. So I don't want to show that I have $5,000. Now I have $16,000 in equipment. But again, that's not the end of the story. We need to go back up to cash because we paid cash for that equipment. So we want to make sure we enter those details as well into the cash account. So again, we're crediting cash for $11,000. So now my ending balance is updated. Let's try one more journal entry and posting it to the ledger. I think you're getting the hang of this. The last entry we have is purchase of inventory and supplies for cash. Now this was our only compound entry as well. So a compound entry is any journal entry that has more than 2 accounts listed. This has 3. So both inventory and supplies are increasing. We debited them, and cash is decreasing with that credit. So we have our references in the journal to show me what accounts that I'm going to be using. So we're going to go and find them in the journal, in the ledger, and post them there. So inventory is the first account. So we're going to go to account 16, put our information in here. The date this was done, the item, the posting reference, where in the journal this can be found, and this was a debit of $2,500, which is an increase in this account. So we want to update our balance to show we no longer have $3,000, but now we have $5,500 in inventory. We also want to go up and update supplies, because that was another item that was recorded and impacted with this journal entry. So we'll update all of our information here, just as we've done before. And this also was debited or increased. So we want to change and update the balance for this account as well. Now, 2 of the 3 items have been posted, but we're not finished until everything is posted. So we're going to come back up to cash and input what happened here as well. Just inventory and supplies. Again, we can find the full details for this in the journal entry on page 1 of the journal. And this was a credit of $33.50 to cash. So again, we want to update the cash account to reflect that change and get the new balance. Now we've posted everything in that journal entry. We've journalized, we've posted. We're totally getting this accounting thing.